Welcome to The Interest. I'm Sarah Wolak. This week kicks off like no other. Our very own Andrew Berman and Vincent Valvo duke it out in today's cage match. And Bill Bodnar offers his perspective on the bond market and Fed activity in Master the Markets. But first, it's no secret that Generation Z has dreams of homeownership, but they don't know where to start. I sat down with Brian View from FinLocker about how lenders can help shoe in the next generation with tips on homeownership and financial literacy.
Our survey did shine a light on the fact that this particular cohort of consumers has a lot of questions. They have not been formally educated.
Gen Z-ers are battling the stereotype of being financially irresponsible and facing the brunt of an unforgiving housing market. But data analyst FinLocker found that this young up-and-coming buyer pool has home buying aspirations.
The biggest finding that we saw kind of year over year was that overall, the survey told us that this particular cohort is very much thinking about ultimately owning a home, where that was not as evident in last year's survey.
Brian View, president and COO at FinLocker, says that this is the second annual survey done with students at the University of Southern California.
Really focused on what is their mindset as it relates to home ownership as a young 20-something, Gen Z.
View said the survey had an eye-opening statistic. 56% of respondents weren't actively managing their finances. But those respondents did express wanting to improve their financial literacy.
The other finding that was interesting was that where these young people are going for information, it's logically first their family, their parents, but then the next source of information that they're going to is social media.
To read more about the buying and financial habits of Gen Z, head on over to nationalmortgageprofessional.com. Reporting for The Interest, I'm Sarah Wolak.
We all dream of owning a home, but for too long, if you didn't fit the mold, you were stuck. Stuck because the system worked for everyone except you. We've changed that. Angel AI uses advanced AI technology to give a 100% trusted solution and fast answers for worry-free financing, allowing you to achieve fair and equal access to lending. Angel AI. AI you can bank on.
Hey everyone, thanks for tuning in to our Master the Market segment. So last week was a rough one for mortgage and housing, right? Rates ticked up to near the highest levels of the year. Why? Well, inflation's running hotter than expected, both on the consumer price level, heck, even the producer price level, which is discouraging because if the producer is forced to pay more, that the idea is that goes downstream to the consumer. And if that were not enough, oil spiked to over $80 a barrel. That's inflationary. So all that leads us to this week, and it's all about the Fed. Right, on Wednesday at 2 o'clock, the Fed meeting will start. They'll drop their statement. Obviously, there's no chance of a rate cut at this meeting. But what they say about the future, what they say about inflation, what they say about the dot plot they're going to give us, right, with their forecast on rates, all that can be a huge market mover. And remember, there will be three distinct reactions to the Fed meeting. It'll happen on 2 o'clock on Wednesday. Then you'll get the press conference thereafter at 2:30, and then the markets get to sleep on, you can get a more forceful reaction on Thursday, which can be completely different. So it's a big week. Be sure to check in. We'll talk to you soon. Have a great one. Bye for now.
Okay, Vince. So we're right now seeing existing home sales are down. New home sales are up. Values are kind of holding, depending where we are around the country. I believe that builders are artificially inflating values by doing some of the maneuvers that they have to kind of do things other than cut price.
Explain what you mean by artificially inflating values.
Okay, so they're giving incentives such as insanely low mortgage rates, incentives on, kitchen upgrades, things like that. They're doing everything they possibly can to not lower the price, because they lower the price, they're lowering the price on all of their inventory.
How is this artificially inflating value? That's not artificial. That's just called good business is what that is. I think you're an anti-capitalist. That's what I think you are. And I don't understand why you go that way. I do hear this. I hear it from you sometimes. I hear it from other brokers and originators. Listen, it is hard to compete with home builders, especially those who have their own, dedicated financing arms. Very, very difficult, especially because they'll throw in, yes, all these little goodies to the borrower, to the buyer, in order to get them to come in and buy.
Mm-hmm.
But why is that bad? Why is that bad?
Okay, because when an appraisal is done, who's that appraisal done for?
It's done for the buyer.
Oh, it's done for the lender. The lender's
The lender, yeah.
It's
sure it's worth that.
Yeah,
correct.
So the lender is saying, all right, we assume that the market is valuing this property based on this data. But then all of a sudden, the builder comes along and says, hey, you know something? We're not willing to let this house go for $500,000, but we'll lower your mortgage to
that's such a silly
5.5%.
What a silly thing. You know what? Because you know that the percentage of
just because I'm right doesn't make it silly.
New home builder loans for new homes, right, that are being done by private lenders, by banks and LOs and things like that aren't affiliated with the home builder, is very, very small. Most home builders right now are financing through themselves. So you know who they're saying is worth this value is worth it? It's to themselves. And they're going, yep, we think it is. Okay. So they're not finding any problem with anybody else. You know who's really happy about what they're doing? I can tell you right now. Tax collectors in the communities they're buying for this thing here, because they've got an appraisal basis now to say those homes, we're going to tax the heck out of them. That's somebody who's going to love this.
So the municipalities are happy. I get it, but at the end of the day, are consumers paying actually a higher price for an inflated value?
I don't think so.
Because
there's a maximum. Things are worth what someone's willing to pay for it. So if they're willing to pay for it, then that's what it's worth.
Would you say actually at least that there is a distortion in values because of this?
I wouldn't say that. No, I wouldn't even say that. I would because look, everything comes with little incentives to get things done. I don't think this is a distortion in value. I think the thing that would tell us if there was if all of a sudden we saw lots of reports coming out saying, you know what, here are homes that were built in the last 4 years. Somebody bought them, they went to sell it 2 years later, and they're all taking a bath. And none of that's coming out. So that's not there. I don't think that's true, that it's a problem. I think you're just trying to make a problem out of it.
I think this is part of the reason why we have inventory issues is because these values are kept up and propped up artificially. That's why we have a home affordability issue.
We have a home affordability issue for a lot of reasons, not because the home builder decided to put granite countertops in order to get the vendor. I don't think that's.
Of course, they also gave low mortgage rates. He's going to declare victory. He's so wrong here.
We are good.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.